Good evening. I'm Dan Fitzpatrick, StockMarketMentor.com. Look, every night we watch the same shows, Fast Money and Mad Money, and we want to use those ideas to grow our money, right? Well, good trading takes more than just pushing the buy button the next morning to get the stocks you saw on TV last night. I'm here to help you make money on these three stocks I saw on TV. Today, we are going to look at Dave & Buster's, Twitter, and then Hewlett-Packard Enterprises. First, Dave & Buster's, play. Company reported great earnings. Stocks now trading as I do this at 44 bucks. Here's the deal. This is what the stock looks like. All-time highs, baby. I think this stock ultimately moves higher. It's coming out of a base that seems like it's been around, for forever, over 9 months. So when a stock does this, this really clears out all resistance and just starts, and should just start moving higher from here. You're going to see huge volume on this tomorrow. I would be careful about chasing the stock that's up this much. It's up over 5%. Think about it this way. Are you really, you're going to get in ahead of everybody else and buy? Oh, I got to get it right away. Everybody already knows about this, so the great earnings are going to be factored into the stock at like 9:31 in the morning. So I would suggest watching it. If you want to take a little bit of stock, if you want to kind of start a position, that's fine. But only starting a position, because typically stocks that break out like this, ultimately they come back to test those breakouts. That's when you can be buying more stock. When you see it testing the breakout level and you see it passing that test, you want to look to take some more stock then. Okay, Twitter. They're talking about this on Fast Money. One guy on, I forget his name, and it's really not important, talking about the potential for somebody to buy Twitter. I'm sure everybody's tweeting about it. And he's looking at the fundamentals and he feels like, okay, if you want to buy this stock on the idea that somebody's going to buy it, he felt like the downside risk is like 12 bucks just from a valuation standpoint. So he's looking at it as being, very speculative. What's the risk? What's the reward? You've got Verizon bidding on Yahoo. Marissa Mayer can get on with her life and do something useful. But so is $3, is that worth it to be buying Twitter? I would just say no, and this is why. One thing that Cramer has said for years, and I get it, I agree, don't buy something just on the idea that it might be acquired. I mean, that's kind of, frankly, it's a stupid thing to do. If you have inside information and you know a company is about to be acquired, you're not supposed to be trading on it anyway. So I'm looking at this, and it's got $3 of downside risk according to this person. That's $3 that I don't want to take, because a $15 stock, take $3 down, that's 20%. Not got that. Okay, and then the last one here is Hewlett-Packard Enterprises. Cramer was talking to Meg Whitman on Mad Money about this. He's making a case, and she's making a case, that this is a really good value stock, that this is now, this is a company that you should be invested in. I agree with that. I'm talking just about the technicals. This is a stock that printed a new high here on April 1st, okay, closing high. The stock, after pulling back, and it was a fairly deep pull, 15%, is now just yesterday above this last high. So you've got an IPO, just started trading last November. You've got an IPO that's printing all-time highs. This fits my pattern that I look for to a T. IPOs that are hitting new highs after these pullbacks. I want to be long these stocks. I think this is one stock that you want to be long. I think it works. Okay, that's it for these three stocks I saw on TV. Look, I want you over at Stock Market Mentor if you're not already. You got a free trial. We are pounding the energy stocks, have been for a while. We're making really good money over there, and I want you to be a part of it. Okay, so check it out, stockmarketmentor.com.